Welcome to this short and simple topic in accounts called control accounts. So, what is control account? A control account simply summarizes a section of the ledger. The section could be sales ledger for debtors or purchases ledger. Okay, that's what a control account. It is just a summary. So the control account's balance should match the total, the individual balance it controls. Okay, so if, for example, the control account is the sales ledger control account, its balance should match the balance for the individual accounts, that is the sales ledger accounts or debtors accounts. If it's not matching, it means there were errors or omissions. So, what are the key purposes of the control accounts? First, it provides a summary of total debtors and creditors. It helps locate errors and it acts as a deterrent against fraud. It also speeds up the preparation of final accounts. So, we're going to take a look at debtors control accounts and creditors control accounts, or purchases control accounts and sales control accounts. So, this is the format of the debtors ledger control account or sales ledger control account. So this is the format, and these are the common transactions that you're going to find, okay? You can have a balance, which is on the debit side, credit, sales, debit, interest on overdue, debit, returns inwards, credit, which simply means you have sold, then they have been returned. Cash or bank receipts, credit, discounts allowed, credit, bad debts, credit, bills received, receivable, credit, dishonored checks are going to be on the debit. Then there are also contras, okay? So these are just set-offs between two accounts, which here, they are going to be here on the credit, but in the purchases or creditors ledger control account, they are going to be on the debit, okay? Then also we have refunds or rebates, which are also going to be on the credit, and then we're going to have the balance, okay? Yeah, and of course the total, and also another balance down here. Okay, so on the other hand, we have the purchases or creditors ledger control account, which has this format. So purchases or creditors ledger control account is where you have purchased some things on credit. Okay, so some things you can return. So returns outwards, you're going to put them on the debit side. Then cash or bank payment, you're going to put them on the debit side. If you receive a discount, you're going to put it on the debit side. Then set-offs. So set-offs are a situation where a customer or a business is both a customer and also, how do I say this? A situation where the business sells and buys from the same company. So for example, they can sell something at 20 kwacha and buy something at 10 kwacha. So instead of paying the 20 kwacha and, the 5 kwacha and getting the 20 kwacha, they sell something at 20 kwacha. So they expect to get a 20 kwacha on credit, right? They sell on credit 20 kwacha, so they want to get the 20 kwacha. Then they also buy something at 5 kwacha, right? So instead of paying the 20 kwacha, instead of receiving the 20, let me say that again. So a business sells something at 20 kwacha on credit and buys something at 5 kwacha on credit. So instead of receiving the 20 kwacha and paying the 5 kwacha, they can just cancel 20 minus 5, 15 kwacha, then they receive the 15 kwacha. That's what a set-off is, okay? So set-off or contracts are going to be here. Refunds from suppliers are going to be here in case suppliers, they refund money for one reason or the other. Then credit purchases are going to be this side, okay? then we're going to have the balances like this. So this is how the purchases ledger control account looks like. So let's take a look at this example, which says prepare purchases and sales control accounts using the transactions as follows. So we have the opening datas, this, credit sales, this, returns inwards, this, cash received, this, discounts allowed, and all this. So your job is to know which transactions are going to be on the, which transactions are we going to enter in the purchases control and which ones in the sales control. That's the job. Okay. So opening datas are people who owe you money. So this one is going to be in the sales control. Credit sales, this one also is going to be in the sales control. Returns inwards, you have sold something, then they have returned, so you sold, so it's sales, because you can't have returns inwards without selling, right? Cash received, it means you sold, then you have received cash. Discount allowed, you sold, then you allow them to get a discount, so sales control. Bad debts, these are people who don't want to pay you back your money, so it's also after a sale. Dishonored check, that is people paid you money, but the checks were dishonored, so they have to pay you again, so sales control. Bills receivable, okay, so you're expected to pay some bills, to receive some bills, I mean, so sales control. And contra set off, okay, meaning that there was a sales and purchases here. Okay, so when you prepare the sales sales or debtors ledger control account, the starting balance was this 20,000, which was the opening debtors or the opening value of the debtors. They were 20,000. Sales ledger has its balance as the debtors, okay? So the opening balance is always the opening value for the debtors. Then, of course, the credit sales, like I indicated, it should be on the debit side. Dishonored checks, debit side. Returns inwards should be credit. Discount allowed, credit. Bad debts, this. Cash received, bills receivable. Also, there's a contra, which, again, we agreed that should be, or we discussed that should be on the credit side in sales ledger. Okay, so when you get the total, you're going to get this, and when you try to balance, you balance this. That's all. Okay, so you just have to know the common accounts and whether they should be on the debit side or credit side. I can explain more in details, but I'm sure it's easy to grasp just knowing that bad debts are going to be this side, bills receivable should be this side. Okay, or for those who want, we can still do that quickly. Okay, so the balance is on the debit side. Okay, these are the amount of people who owe you money. Then again, you have sold a lot of things on credit, meaning that there is this value for the money that people owe you from the sales on credit. Also, there are some people paid you through check, but the checks have been rejected, dishonored checks. So these people, they still owe you a value of 500. However, there are some people retain some goods, so this has to be on the opposite side. Then you also gave away distance, opposite side. Then there are some people who failed to pay and you have accepted, opposite side, right? These are the good part, the income we're expected to generate. Well, these are the losses, right? Then some people have managed to pay you cash, so they no longer owe you. So this side, okay? Because you are expecting to get paid this, so when they pay to cancel, you have to put on the credit side. Bills receivable, also credit side, okay? Then a set-off is, like I said, where a company sells and buys from another company. So this one in sales ledger, it's going to be here. Okay, then you balance the totals. Okay, so the previous entries or transactions were for sales ledger control account. Okay, but most of the times they can be mixed. Okay, now we look at the ones for purchases ledger control account. Okay, so we have the opening creditors, which is this, credit purchases, which are these. So opening creditors are people we owe money. Credit purchases are the new purchases we have had on credit. Returns outwards are goods we returned because we are not satisfied with them or for another reason. Discounts received is the discount received after buying or purchasing the goods. Cash payments are the money we have paid the creditors. So set off or contra is, like I said, when you are the buyer and the seller to the same company or business. Okay, let's see how to enter these transactions in the purchases ledger control account. Okay, so these are the entries. So the balance is 40,000. Then the new purchases we made on credit is 14,000. Then the items we returned is 7,000. The discount received after getting the purchases is 5,400. The payment we made from whatever we are owing people is 30,000. Okay, then there was this contra, which is this. Okay, so the total is this and the balances. So this is the purchases or creditors ledger control account. So this marks the end of this lesson. See you in the next lesson.